Mortgage rates keep spiking, but there have been so many Americans lined up to buy homes that increase in cost hasn't deterred any buyers yet. Do we have any signs that demand might slow? Our record low inventory fell again this week, but only a couple thousand homes. So maybe those are tiny little signals. Each week, Altos Research tracks every home for sale in the country. We analyze all the pricing and all the supply and demand and all the changes in that data, and we make it available to you before you can see it in the traditional channels. Traditional real estate data is released monthly. So by the time it gets to you, it's kind of old news. So the news right now is that home prices are still surging, and the effects of higher mortgage rates have not set in really anywhere yet, even though we expect them to at some point. I'm Mike Simonsen. I'm the CEO, co-founder of Altos Research, and let's look at the data to see the details for the week of February 21, 2022. The median home price in the U.S. rose 0.5% this week to $382,000. Week over week, home prices increases like this are absolutely normal in February. They're expected, even in a market that is facing the new headwinds like rising mortgage rates. The median home price will normally rise every week until June. The first and second quarters are when the best inventory gets listed and the most buyers are shopping. So you can see the dark red line here, each annual cycle, and how early we are in the upslope part of that annual curve right now. The last year, this time, we were at $349,000 with huge appreciation still to come. This year has plenty of price appreciation in front of us too. And you can see why we're on track to have another 10% plus home price gain year this year in 2022. I mentioned last week how the price of the new listings, that's the light red line here, jumped above the whole market for the first time ever in our data. As the new listings hit the market, they use all the local information to set their asking price. And because of the velocity of sales that happen at lower prices versus the higher price points stay on the market longer, and that the trend for the overall market tends to stay above the new listings. Last week, though, the new listings jumped above the whole market, and that's very, very bullish. That means the new properties are pricing in all the demand that they can, and they're stepping up, and it means that the top-end homes are moving very quickly. So while looking at the light red line here, that's the new listings price trend. It is much more noisy week to week. It bounces around. But it starts to turn sideways usually by March. The big spikes are in January and February because it leads the whole market. It slows by March and April. This is one way that the annual price increases, like the price appreciation for 2022, is already baked into the data in the first quarter. So you could see this week, last year was when the new listings price growth flattened a little bit. The light red line turns horizontal a little bit. The same thing's happening right now. The median price of the new listings is $385,000. It's down a fraction from last week, but still above the whole market. So this tells us that sellers right now have a ton of buyers. They're pricing strong, and this means that future sales prices will still be elevated. So the house gets listed today, it gets an offer in March, it closes in April, and you start hearing about that in May. So what we're looking at here is the price strength in the May reported sales numbers. So even if mortgage rates slam on the brakes too soon, like real soon, we already have this pricing visibility through mid-year. The available inventory of unsold single-family homes fell by less than 1% this week to 248,000. Each week brings us to a new record low in available inventory. And when people ask what the impact of rising rates will have on the market this year, inventory rather than price is where we project it. So we're forecasting by fourth quarter of 2022 to have slightly more inventory than in 2021. Right now we're below, but you can see by the end of the year that maybe we will climb off of our record lows. You can see from the annual curve here that normally by late February, we're at the very low point of the curve. The weekly decreases normally have slowed so that inventory can start building in March, April, May, June. Last year was the anomaly when inventory didn't hit its bottom until April 30th. Up to this point this year, we've been looking like we're on track to repeat for last year. But this week's inventory decline was only 2,000 properties. So maybe we're turning the corner. It's only one data point, it's only 1 week. So we'll see what next week looks like too. The inventory peak last summer was at just 437,000 homes on the market in early September. So if rates continue to increase, you could imagine that maybe we get to 500,000 at the peak this year. That would feel significantly different from where we are now, but would still be near record lows. So therefore, not pulling prices down. There just aren't any signals about lots of inventory becoming available. We can't find it anywhere. Hopefully we get a little bit more as the economy changes. The end of February is also the time when we have the fewest price reductions per year. Most of the inventory is new and hasn't had to take a price cut yet. Usually in March, some sellers are surprised that their homes haven't moved, so price reductions start ticking up. Last year, the market accelerated all the way through April, so price reductions didn't really start climbing until maybe May or June of last year. As of right now, there are only 17.7% of the active homes who've taken a price cut in the last few months. That's fewer than last year by a smidge, so that fewer price reductions than even last year. Normally by this time of year, you'd have like 25% who needed to take a cut. You can see in 2019, that's after a year of rising mortgage rates, price reductions were at 27%. See that little bit higher there? And we haven't had a bear market in real estate and residential real estate in over a decade, but this is one stat where we can watch how quickly and how steeply demand slows as money gets more expensive. We've been watching the immediate sales phenomenon very closely, and this week there's still no sign of buyers backing off. I suspect that there have been so many buyers waiting for so long to find their home that even as rates rise, maybe we go from 20 bidders to 10 bidders to 5, but the house is still going to go into contract immediately. It's still a bidding war. So our immediate sales may take a few more weeks to report adjustment. So it has to be a point when there are no immediate offers, that the house takes more than a week, heaven forbid, more than a week to sell. So of the 72,000 listings that hit the market this week, 22,000 of them went into contract essentially immediately. There's, a third, almost a third. No sign of demand slowing in the immediate sales tracker yet at all. And in fact, the time to sell a home is faster than last year and dropping rapidly. So the median days on market is already down to just 40 days or so. Last year, we were around 60 at this point of the year. There was still last year some of the really weird properties that usually sit around for a long time. They hadn't moved yet. And so those maybe bring the average up. But this year, all those are now gone after a year of really crazy market. So everything is on the market and moving quickly. And this includes all price points. So the highest demand price points, the $300,000 to $500,000 range across the country, that's even faster than what we're reporting here. So the median days on market already under a month there, and it's still February. Some of the hottest zip codes in the country are already down under a week on the market. And that has not shown any signs of slowing yet either. But those are the signals that we are watching. How quickly and at what price points do we feel mortgage rates? As of the third week of February 2022, American home buyers are undaunted. Okay, that's all the data we have time for this week. To get your local data for your buyers and sellers, go to altosresearch.com and join us. To get your local market data, you can get that into your clients' hands today because everybody needs to know what's going on. This is a market that's everybody has known to be super hot, but now what's going to happen next? The market's changing fast. So this is your opportunity to help people succeed. Also this week, a new Top of Mind podcast will be available Wednesday. Don't miss that. Great stuff for you. I appreciate you being with us. More next week.